Hello and welcome to another update video about FETCH.AI. It is one of the most popular AI cryptocurrency charts, and we take a look at the chart from an Elliott wave point of view. We take a look at the bigger picture, the overall time frame, just to give you an idea of where things could be going, on the larger time frame. We are clearly in some kind of an uptrend, and this uptrend is probably still continuing, but we're now getting into very, very messy price areas. The price structure has become super messy. It was easier before, and I can explain that based on an Elliott wave structure that we see here on the chart. First of all, I see this move to the upside as a so-called ABC structure. In this scenario, the C wave would be a 5-wave move. That's just based on Elliott wave rules, which means we are watching for one more high. Now, this is not guaranteed, but Elliott wave tells us which levels ideally would need to hold to keep the upside expectations alive, and we will talk about that in a minute. But the baseline is that this is an ABC structure, and there are common target areas for such a C wave. One way of calculating these targets is, for example, to take the length of the A wave and then to compare that with the length of the C wave. And this is the white target zone between $6.22 and $19.27. Of course, quite a large area, but it's actually not that large if you compare it with the movements that happened before. And if we look at this, we can see we haven't reached that target area yet. And also from a wave count point of view, one more high would actually look best. So I'm still watching for one more high in wave 5 of C. And it is possible that this wave 5 has started. So the C wave started most likely in November 2022, and we already formed 3 waves. Now, what you see on this chart is that based on this, at least in this ABC structure, most of the rally is likely already done. I mean, the A wave was a substantial rally, and waves 1 to 3, in percentage terms, those were the main elements of this trend. The 5th wave is nice to have and is typically going to be messy. So we see that already now. It's a difficult structure. We don't see much upside momentum. Yes, the market has moved up since August, but not in substantial ways. So be careful out there. This structure will likely change on the micro level. It is important, though, to understand what is the key level against which we can still focus on higher. For me, there are 2 levels. First of all, it's the August low, which formed at around 69 cents. Below that level, the 52-cent level is key. That's not only a previous swing low, it's also an important Fibonacci level. We know that from an Elliott wave point of view, we don't want that a wave 4 in such a configuration, in such a pattern. We don't want that a wave 4 breaks below the 61.8 retracement level. And that's, as I said, at 52 cents. Now, when we look at the move to the upside here, we can identify that the price is likely in an ABC structure. That, again, has to do with the overall chart context. And ABC structures are messy. They will change a lot. But the current idea is that we could have started wave C of A already. So ABC would form a larger A wave. This would then result in another pullback and another rally. So to keep it simple, as long as the August low is holding, we're going to watch for higher prices into the direction of $6.22 or higher. But the microstructure might shift. It might change over the coming weeks and months. And any break below the December low, which formed here at $1.12, will mean that probably this B wave is still unfolding. But if we then also take out the August low and the price dips lower, and we reach the orange support region, then we can still give a bullish scenario a chance. Then most likely wave 4 is still unfolding, but the market would have to restart any attempts to rally in wave 5 again from scratch. So when we then look at the smaller time frame, the situation hasn't really changed since the last update. We talked already about this ABC structure, and I added in the last update this support area to the chart for a possible B wave pullback correction. And yeah, we've now reached this support area without any signal, however, that a low is in. And obviously, as I mentioned in the Bitcoin video, Bitcoin has formed a 5-wave move down. So it's definitely worth to be on the side of caution. it might make sense before entering any aggressive trades to, for example, wait for a 1-2 setup to the upside in wave C. Yeah, quick reminder that a C wave should be a 5-wave move, and it starts with a 1-2. So you might wait for a first rally followed by a higher low to enter the market, because this is currently a B wave pullback, and B waves only have weak support. Yeah, B waves often overshoot to the downside, or they can be quite deep. So the levels haven't changed. So we've got next support at $1.29, $1.21, and below the red line at around $1.10, or rather $1.09, the B wave that presumably bottomed in November is still unfolding. I mean, we would have to go with that assumption then. Maybe even the wave 4, which, however, currently, presumably, bottomed in August. So these are the two alternative scenarios I have. This is definitely not a structure to the upside to trust. I don't trust it. We talked about that before because it's all very choppy. It's all corrective. It is related to that larger time frame mess that I just shared with you. So that is where we have to be flexible on the smaller time frame. I think the most important element on this chart is the larger support area below, which I've labeled wave 4 support, because this is for the larger wave degree. But so below $1.21, $1.09, then 75 cents, then 52 cents. I don't really have any support level below, unfortunately. So that's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.